Hey guys, how's it all going? So I'm about to do an interview with Sven Carlin. For those of you who don't know who Sven Carlin is, he is one of or the biggest value investors on YouTube. He's got a PhD in investing and risk management, something along those lines. And I remember reading a while ago, but he actually has a very impressive long-term return when it comes to investing. So with this channel, my goal is basically two things. One is business, how do we make money? And two is investing, how do we grow that money that we have made? The end goal is, I think for most of us, is just financial freedom, not having to worry about money ever again. That's the goal. That's the goal with this channel. Get more people to financial freedom, get myself towards financial freedom, which I am actually very close to. Anyway, when it comes to this interview, I just want to be very upfront and just straightforward with the questions that I ask. I want to get to the bottom of the matter. How does he invest? What stocks does he see opportunity in? Where does he see money in this market? Does he think there's money in China? Does he think there's money in some specific sector? Does he see a recession upcoming? What is his thoughts on the current market and how to make money over the long term and grow money into something large? So let's see how I do with the interview. But Sven Carlin, I've been watching him for a long time. And as far as I can tell, he's a very honest, upfront guy who has a very impressive return when it comes to investing. So I'm very happy to interview him for the second time. And as I said before, just like the last one, if there's any questions that you think is too upfront or something, you don't have to answer it. We can cut it out, anything like that.
No, but I don't think we had to cut out anything, so they won't be anything to cut out now. So you can put that in the video too.
Okay.
That we won't cut out things.
Okay, we'll put that in. Guys, you've got that. We're not going to be cutting out anything. So with regards to the way I like to think about things, I guess in a way I like to think about things from kind of first principle perspectives in a way. And I like to think, okay, so why are people watching the channel? What are the viewers' end goals? And I think a lot of the viewers' end goals is to make a lot of money and become, I guess, financially free. So with regards to yourself, do you have an end goal when it comes to money? And how are you going about achieving that end goal?
That's a good question. So since ever, my goal was to be financially independent. So I wanted to have my 1 million, 5% dividend yield. And when I would reach that, I would have my 50,000 per year and I would be financially independent. Then, of course, that was before life strikes you. And then life comes, and then you simply see, okay, that's boring, just living off dividends. You want to do more, you start exploring, you start spending your money on a PhD, things like that. So it's always an evolving process. But my goal now for next year, 2023, is to simply invest 50% of my revenues into a long-term investing portfolio. And that should over time compound, and maybe in 20 years, I'll make something of it or not. But 50% for living costs, whatever it is, or other things, and 50% investing.
Right. And do you have like a total amount of, like you said, originally it was 1 million. Do you have a total amount now or not really? It's kind of...
I think for me to be financially independent, I know what my life costs are. I'm not crazy. I'm not wearing branded clothes or things like that. So all I need is a nice boat to go fishing, and that's it. So if I have a few million in the stock market and a property, I'm set for life practically.
Okay. When your original goal was 1 million, was that like 1 million plus your house completely paid off and all of that?
When I had that goal, I was still, I think I started it, I had to go when I was 16, 17. So at that age, you don't even think about houses or things like that.
You just think 1 million, that's a nice high amount.
But due to circumstances, my house is now paid off, for example. So I don't have, unfortunately, I don't have a mortgage because I'm a foreigner. so I couldn't get one. And then we had to reshuffle a lot of things, but that's also a benefit now on the long term.
So would you still want to get a mortgage and get a bit of debt, or
when we bought this house 2 years ago, and I was doing everything I could to get the mortgage because interest rates were at practically zero.
Yeah.
1%, and for 30 years, and I thought, if I can get that mortgage, I went to all the banks, and I would, every next step I would get declined because I am a foreigner, and that made me crazy.
Yeah.
But yes, if I could have gotten 2 years ago a 30-year fixed mortgage with, I think the interest rates was 2%.
Yeah.
Now with inflation at 10%, I would be really, really good, but I didn't make it because of my personal circumstances. That's it.
Yeah. What country are you based in?
I'm now living in Slovenia.
Slovenia. Okay.
Yeah.
Interesting. Yeah, I got I was lucky enough to get a mortgage, I think it was a year or 2 years ago, and it was locked in at 2.25%. I think it was locked in for 5 years, which was really, really good.
That's really, really bad from my perspective, because UK, Australia, New Zealand, the maximum is 5 years to lock in a mortgage, because the banks know that it's too risky to give longer term mortgages. In the US and Europe, when I bought a house 6 years ago in the Netherlands, I got a locked mortgage for 30 years at 3%. For 100% of the house, no down payment. They give you 103% of the value, so you can even renew the kitchen. It's crazy financial engineering. So of course you take those mortgages.
How long ago was that?
2016, but they still do that in the Netherlands. It's crazy.
100%, no down payment.
103%. You get money to pay for taxes and a new kitchen and things like that.
Does that not sound like what they would be doing, like the things they will be doing back in 2007, 2008 in the USA? Does that not remind you of that?
I bought a house for 300,000 in 2016. We moved to Slovenia in 2019. We sold it for 450.
Yeah.
The price on the market now, the value would be 700.
Wow.
Because they give 100% mortgages with low interest rates. So it is really a bubble, and I don't want even to think about how the real estate bubble in Europe will end. Probably the euro will get destroyed, but that's a different story.
Right. Yeah. Okay, I just want to talk a little bit about your investing style, which I'm sure a lot of viewers already know. People watching this will know you're more of a value investor, long-term compounder. So just thinking it from the regular person's point of view, if they adopted your style, how long would it take them to kind of build up a good amount of wealth and develop financial freedom?
Let's first discuss my style, because I started investing 20 years ago, and then 2002 I have bought 2 stocks. All my money would be in 2 businesses, because those were the best businesses. I liked owning them. My dividend, and my goal was, okay, I accumulate 1 million of those and I am free. Then 2007, those exploded. I sold, bought a boat and whatever. 2009, 10, 11, 12, again, I was just buying 2 businesses that I liked, and that's it. And then 2017, 18, I started doing research, started sharing that online, starting doing YouTube. And then you have this incentive on YouTube and everything to just do more. If you have a YouTube channel with 2 stocks compared to a YouTube channel where you discuss 50 stocks, the number of subscribers that you will have will be 100 times bigger there where you discuss 100 or 50 stocks compared to just 2. Of course, if one of those 2 is not Tesla, but that's again something else. So therefore,
even with regards to that, like Tesla, there's such an incentive for the YouTuber to make as much videos as possible about Tesla, and what, like, if thinking of what is the incentive for the YouTuber? Is it that they love the stock, they love the price of it, they love the long-term return, or is it just the money that they make from making YouTube videos?
You can make a video about Tesla every day, and you
Yeah.
can just turn that and make a lot of money yourself by making Tesla videos.
Yeah.
But I fell into the same trap, and then I started making different portfolios. Am I going to own 10 stocks, 5 stocks, 20 stocks? So over the last 5 years, I fell into that YouTube trap, and I have sold everything I personally owned in August to clear my mind a few months to really see what my style is again. And likely from, as I said, 2023, I will be back to investing. And maybe in 2023, if things remain as those are now, I will invest in one business for myself, and that's it. And then in 2024, 2025, I will diversify over the very long term. That would be my personal style, which is something I don't recommend to anybody, because it's against all financial rules to tell people I'm investing in only one business.
That's a very kind of Charlie Munger-esque style, just buying 1, 2, maybe 3 businesses, and then just like, yeah, just letting it go. What are you going to do with your YouTube though?
Therefore, I started demo portfolios. So I started a YouTube portfolio. Okay, we opened the demo account on a broker, 1 million, and we invest in 20 stocks. So we do the research, we do the following, we do this. From those 20, over the next 20, 30 years, I might select 1 or 2 that I invest my money. So I do the research, I get the benefit, I follow the stock prices, I learn about the businesses, and also YouTube investors get the benefit because I cover their stocks. And I think that's a win-win for all. And you never know. Charlie Munger was reading Barron's for 50 years every week, and he got one idea out of that over 50
that's crazy.
years.
What was it? Was it Costco?
I don't know which one. I didn't get which one, but he said he made a few billions on that one idea. So he was doing something for 40 years to get one freaking idea. That's amazing.
Ah, that is actually crazy. But yeah. Yeah, that's interesting. Do you have any idea of what your annual average return is?
Over the last, since I started YouTube and then my research platform, everything is documented. So over the last 4 years that I managed 2 portfolios, it was 13% for one portfolio and about 17% per year for the other portfolio. Right. That is, every transaction is there on my research platform. Who wants to check it can go there and check it. So that is, but I'm absolutely unhappy about the performance. I think the market did also, I think a little bit less now as it went down, but so yes, I did beat the market, but I think I took too much risk. I said too diversified, too much YouTube, too much catering for what I thought the customer or the YouTube watcher wanted, instead of really focusing on lower risk for higher return, which is then value investing.
So what was that? 13 and 17% over, what was that, over the past 20 years?
4.5 years.
Do you know what your one is over the past 20 years? Do you have any idea of that?
It is much, much higher. When I calculate, I made in 20 years about 35 times my money if you would have calculated it from the start. But then I sold everything in 2006 because I made a lot of money. Then I wanted to do other things. Then I started buying again big in 2009, 10, 11. Then sold again in 2015 because I was moving, going to England, etc. So it's not something that I would measure as a performance, even if it looks good. Maybe too much luck or maybe too much just circumstances. So I wouldn't. What can be measured are the last 4.5 years.
Okay, I see.
But actually, I want to go back to the performances from the past because it was much, much better.
Yeah, well, you actually, it kind of worked out that you timed the market very well, especially back in '06 and
I
'09.
think investors, and that's something also at the end, investing is personal. You are investing your money for your own financial benefit.
Yeah.
So if you're looking at a stock, okay, now it gives me a dividend of, I don't know, 7%. And then 5 years later, the same business gives you a dividend of 2% because the market is exciting. Then you're thinking, okay, what's the risk and reward of that stock versus the risk and reward of fulfilling one of my dreams? And then you say, okay, now it's not smart to keep that stock. It's better to, I don't know, buy a sailboat and go around the world with my wife or something like that, or buy the house, or doing something with that money. And that's why I also say to people, it's about thinking about your investments. Of course, if the dividend yield is high, the P ratio is low, the risk is very low, then it's better to stick to your stocks and wait. But if those go up, then you might think, okay, why am I investing? You don't want to die rich, as Buffett. I think most of us want to enjoy life too.
Yeah, you want to make use of your money, right? So
Yeah.
I just wanted to share my screen with you. Can you see that?
Yes.
So this is the look at the S&P 500. Currently, it's showing the year-to-date performance of all of these stocks. So for you, looking at these stocks here, where do you see opportunity in this market? Do you see opportunity in any of these sectors, or?
So about sectors, I don't know. I know that Apple is, for example, fairly priced.
Fairly,
so
okay.
fairly, a little bit still exuberantly priced, because nobody's panicking. Everybody thinks that Apple will just continue to be Apple forever.
Yeah.
But on the other side, Google, if you look at Google, it is much cheaper than Apple for something that I would say better long-term growth, better long-term positioning, because your Gmail, your this, your that, all those things are still free, while you have to buy a phone with Apple. And I think Google has less risk at a lower price long-term. Amazon, the same, so also cheaper. And I think there was a title how Apple is worth more now than Amazon, Google, and Facebook
I saw that
combined.
Yeah. Crazy.
And if you look at meta platforms, people are still using Facebook, Instagram. Of course, there is a little bit less of advertisement, and Mark is spending every cent he has on the metaverse. But if that works, then it is, again, a great investing opportunity from a risk and reward perspective, much better than Apple. So I would say Google, Amazon, Meta are better from a risk and reward than Apple. Microsoft, I see it's still very stable there. Looked at a few months ago, was too expensive for me. And as the rest is there, now that is something we should do stock by stock.
Yeah.
Healthcare, I'm not really following there. I think they had a big boost from the pandemic. And I'm always wary about the regulation there, etc. Though that goes in cycles. Every 5 years, those are really cheap. Then those are more expensive, etc. So that's something interesting. Berkshire, great business, too expensive now, for example. You have to buy Berkshire when everyone hates Warren Buffett and everyone thinks he's too old. When everybody's excited,
He's lost
it's
his
not
touch.
the time to buy. Yeah.
Okay. And what about energy?
Energy, so there is a thesis on oil that it will go higher because of the lower investments, but then you always have to look about the cycle there. I'm always thinking, with good production and everything, oil prices can hit 40 per barrel, and now at 90, people think it will be forever at 90. Of course, if oil stays at 90 and then goes to 100 and higher, and the prices just go higher, then all these investments are good investments. But if we have a recession or something or whatever, like we had 2 years ago or something like that, when oil even went negative, then all these stocks can crash, and you always have to think these at cyclicals. So you buy those when nobody wants to touch them, and when everybody is excited about energy, the risk is much higher and the returns are normally much lower. So I will be looking into oil. I have a complete thesis that I have to develop over the next month or two on the risk and reward, and then I will see the likely long-term price of oil. Maybe it will be 80, but then still you try to take advantage of those cycle and buy oil stocks when those are below that long-term cycle price, when oil is below the long-term cycle price, and sell when it is above the long-term cycle price.
Like, so were you buying oil like a year, 2 years ago? When it was cheap as anything?
Yes. Natural gas, more specifically.
Okay.
But yes, in September 2020, November, it was really, really cheap.
Yeah. Were you buying natural gas itself or the companies, the stocks?
Company.
Yeah. So you mentioned the Google, Apple, Amazon, Meta. Did you have a favorite out of, I know you said Apple was the more fairly priced one. Did you have a favorite out of the other three?
I like Google as a business. I am on YouTube. I use Gmail. I use Google Maps and everything. I like what they are building. Of course, they are spending a lot of money and all crazy ideas to grow and to serve even better the customer. But if you give me $1 million, and Sven, you have to put it now into something for the next 10 years, and then after 10 years we can touch it. Of those companies at this moment, I would put it into Google, if you ask me, from the big tech companies.
Interesting.
Facebook is also very attractive from a risk and reward perspective, but there is, I think, more risk, perhaps more reward, but then you have to see, okay, am I going to risk more or not? If you can lose $1 million or see it going ugly, then maybe it's even better than Google from a risk and reward perspective.
Yeah, because Facebook, they had all those issues with their profit fell. They put so much money in the metaverse, it hasn't given any returns. They've laid off a lot of workers. How do you see the risk?
That won't give any returns for the next 5 years or even 10. But if they manage to do what they're planning to do, the returns will be amazing. And that is the risk. If they don't manage, which is possible, then there will be a lot of billions going down the drain. And also your investment will go down the drain with it. So that is the risk. With Google, they're also spending on a lot of things, but maybe not as much and not really betting the whole company as the metaverse. And people are still using Google. They didn't leave Facebook behind or Gmail behind. Everything is working well. People are using more and more happy Gmaps and everything. So they keep building on their platform there they have. And Facebook competition is there. We see TikTok taking a lot of time from Facebook. And there is nothing in the air that will take away your Gmail or something like that.
And they also got YouTube as well, which is just a crazy business model. Like, it's almost a monopoly. And it's like, it's taken away from the TV viewers. Like, everyone just seems to be going to YouTube just because you can watch it anytime, when you want, what you want, less ads.
Yeah. And then also with YouTube Premium, absolutely no ads for $10 a month. So if you don't have it, I would recommend it. I could not watch YouTube with the ads. So I pay $10 a month and there are no ads.
Is it only $10?
Something like that.
Crazy.
Really, $10 and no ads. So that's something I would suggest to anybody.
Yeah, I didn't even know it was so cheap. I need to do it because the ads kind of annoy me a little bit.
Yeah, just check it out. So
Yeah. Do you have an expected return on any of those stocks? Have you calculated that, or intrinsic value?
for
Just
these big tech
yeah, the
companies,
big tech
Google, or
ones. Yeah,
I think Google's price earnings ratio is around 20 now, if I'm not mistaken.
right.
So that is, if you invest now, that's giving you about 5% per year. And then the other part of the return will depend on how fast will Google grow.
Yeah.
If it continues to grow at 15% per year, then you have 5 plus 15, that's 20%.
Mm.
That's an amazing return. Let's be more conservative. Let's say Google will grow just 7% per year. Let's say it will not grow for 2 years, then it will grow 20%, things like that. And that's a 10, 12%. That's why I said Google 10, 12% conservatively, nothing wrong with that. And you can sleep pretty well. If it goes lower, you buy more and your return actually goes higher.
Yes. I'm guessing with the one or two stocks that you buy, over the next sort of year or whatever, probably won't be one of those bigger market cap companies.
No. It should, something really bad should happen in the market's perspective on those companies to really have them much, much cheaper. I once wrote an article for Seeking Alpha discussing Apple in 2016, and the P ratio was 10 with 35% of the market cap in cash.
Whoa.
So that was a mind-blowing opportunity.
Oh,
I bought it and then stupidly sold because I think I needed to research other companies and own them to do whatever I was doing. But that would be a great opportunity. I think this Google is now a good opportunity, but I'm looking for better opportunities, let's say.
Yes. Yeah, because Warren Buffett was buying Apple back then as well, right? He was just snapping it up like nothing else.
Yeah.
He obviously saw the numbers and the business model and just thought, oh yeah. And he has to deploy a lot of cash as well, so he needed the bigger type stocks.
Yeah. So it was really a no-brainer back then, and but looking back now, you see, okay, what was the case with Apple? You need low risk, and when a company has 35% of cash, 45% of the market capitalization in cash, and a high profitable, high margin cash flow business, then the risk is low, high customer retention, low churn rate, everything.
Yeah.
And that was a low risk, good return, and that was what Buffett was looking at. At the P ratio of 20, if we have 2 years of no growth for Google, the stock can go down another 30-40%. If there is a slowdown in advertisement and this and that is then, let's say, a short to medium term risk. So always looking at the risk and reward from a time perspective, and then you compare with all the other opportunities, and then you say, okay, I like this, I don't like this, I like this a little bit more. So I'm not saying no, but maybe just not now.
So we'll move on a bit. So when it comes to risk and reward, when you take a look at investing in China, what are your thoughts? A lot of Chinese, I got Shanghai, Shenzhen, CSI index, 300 index, that's down 36.5%. Alibaba, all of those big stock, Alibaba's down 77%, Tencent down 68%, Baidu 75%. When you look at China, what are your overall thoughts? Do you see opportunity or risk, mainly risk?
I think there is huge opportunity, but there is also risk. So if you take those big ecosystems, Tencent, Alibaba, you are buying companies that are scaling in China and globally, that have great market positions when you deduct the cash and the investments, at price earnings ratios of, 7. So if you look at the opportunities and what they have done in the last 10 years and what their plan is to do in the next 10, 20 years, those are amazing investment opportunities. If that would be an American company, it would be like Apple in the trillion market capitalization, if those companies, those Chinese. But on the risk side, there is also the risk. And the risk comes in two parts. Maybe the most important part is, what will our politicians decide? And that is different for you that are in New Zealand, for me that I'm in Europe, and for American investors, because some American investors already had their investments frozen because American politicians said, we're going to sanction this. You cannot own China Telecom, Guangsheng Railway, and things like that. They have to be delisted over the last years. And a lot of people got their assets frozen, then you got some money back, etc. But it was a complicated situation. And if our politicians say China is doing bad things, we are going to sanction them, your assets are frozen, which will not happen if you are from Singapore or something like that. So that is the first risk. And you have to just think, okay, if I put my money there, what do I do if that happens? I think the probability of that happening is pretty low, because then we would have other fish to fry if there is a global escalation of conflict. But you have to always think, keep in the back of your head, what if that happens? And then you can go about portfolio exposure, how much it fits you. Okay, I say so much. If I get frozen for 10 years, I'm okay with that part of the portfolio. So that's from our politicians' risk. Then yes, China is a communist country. It works completely different than from most of what our audiences are used to, from democracies, etc. So it is simply a different mindset, different system, etc. So even then, things can change there. And then you always have to keep, okay, if I invest that, if things change, how it would affect me in the worst case scenario. Because when it comes to risk, it's not about, okay, it will happen like this or that. It is about what happens to me if it happens.
Yeah.
And if you can answer that question, then you might think also about the opportunities. But if you say, okay, I cannot tolerate that, well, there will be other opportunities. And then you always compare it to Google. Google has no business in China. It offers likely a long-term, double-digit, decent, lower risk return. And then you compare the risk and reward of Chinese investments, Google, and other opportunities that you have for investments. And then you get a clear picture about balancing things.
Mm-hmm. And also you want to...
Yes.
I was going to say, you want to also think about like how you sleep at night. You don't want to be worrying about your investments every night, you know, as well.
So I think now investing in China, if you look at from a fundamental perspective, risk reward and everything, even Michael Burry said that it is so cheap that it can be cheaper. Yes, it is an opportunity. It's a great opportunity. We always, as value investors, like value, like bargains, like this. But the risk is there. And I think the best explanation I can give is the risk is there, and you have to personally, you yourself, see how it fits you and what happens to you if shit hits the fan.
Yes. Do you know what happened to those people who got their money frozen? You said they got some of it back. Do you know how much they got back?
We owned something, Guangsheng Railway, which was a railway that connects the area around Hong Kong and things like that. And then it got delisted from the New York Stock Exchange. Of course, the stock fell 50%. Then it was frozen for about a year. And then my broker told me that they can somehow, through an agreement, sell the stocks. And then I got the value because it is trading in China. So they sold it in China. And I got my money back after it was frozen for a year. The same thing is now, I have had some small Russian positions, and those are still frozen.
Mm.
And we will see over time if something, if Putin dies, then maybe I will get some money back. If he lives forever, then likely not.
Yeah. Wow. So I guess those are the risks of investing in those types of countries. So you had to sell that Chinese stock once it had fallen by a lot, right? You couldn't just
No, I
hold on.
didn't have to sell it, but my broker offered me, okay, it is frozen now, but we can sell it because of this and that agreement. And then I said, okay, sell it so I don't have to think about it anymore. But it was much lower. So I can go now back and buy it on the Chinese stock exchange through a different broker or something like that. But then it gets very complex.
Yeah. So what about you yourself? Are you considering China right now of actually buying the stock there?
I have this on my research platform. I have this model portfolio that I've been managing for the past 4.5 years. And there the strategy is to invest globally in value investment opportunities, emerging markets, etc. China has been an emerging market. So I'm just sticking there to the strategy, and it is pretty heavily invested in China. One stock is already sanctioned for US investors, not for European investors, or partially, but still I'm getting the dividends and reinvesting those in other businesses. So for me, it's still okay, and I hope it will be okay. And I'm sticking to the strategy, so I'm not changing anything there now. For me personally, for that hope of a few millions down the road, I will still have to see whether I will put my money in China. It depends also on the other opportunities, because the markets are down, Europe is down. So if I can find similar risk and reward in Europe, I will not put my money in China.
Yeah.
And I'm looking at the stock prices, and yes, there are opportunities. China looks great, but I'm looking at my European opportunities, and those also look pretty good for no geopolitical risk. And a year ago, those were much higher, and then China looked much better. Now, it's not the case anymore.
And what about compared to Europe, China? What about USA? What do you think about that?
USA is still the darling of the market, Apple leading everybody. So I think the risk and reward there is the most expensive. So everybody loves that. And then it's not that attractive to me. That's why I said, if you force me to pick between Google, Amazon, and all those, I'll pick Google. But if I then start comparing to other opportunities, then I might pick something else.
And in Europe, do you have any favorite countries in Europe right now?
I don't do countries. I have a few smaller caps in Europe that are interesting, but those are, let's say, more detailed investments and analysis. I'm still following them, and I still have, unfortunately, hopefully the market goes lower 2 months before I restart my investments, as I switched countries to lower my taxes, and now I have just to wait.
Yeah. Okay. I'll move topics a little bit. So I want to talk a bit about a recession and market crash. There's been quite a few people warning that a recession is coming. Jeff Bezos said, batten down the hatches for an upcoming recession, basically said that. Goldman Sachs CEO said there's a good chance we could have a recession. JP Morgan CEO, Jamie Dimon, said US is
Stanley
likely.
Druckenmiller said that he will be very surprised if there is no recession in 2023. And if he said that, then there will be a recession in 2023.
Is he quite accurate with his predictions? And
yeah, he is the best.
So you reckon there's going to be a recession basically coming?
I think sooner or later there will be a recession. And if you look at the stock market, the Nasdaq is already 30% down, the S&P 20, 25. So car companies are heavily down. Tesla is down 50%. So there is recession in the air. And sooner or later, especially after all the quantitative easing that we had over the last 2 years, all the money printing, simply there has to be some outlet where things slow down a little bit, companies go bankrupt, and people spend less. So it's unlikely that the party continues forever. And sooner or later, keep in mind the recession is just less economic activity than the previous year.
Yeah.
Or 2 quarters of slower economic activity. So if you have booming economic activity like we had a year ago or the last quarters, then it's really easy to fall into a recession. You have just a little bit less activity and you already have what economists define as a recession. How big the recession will be, nobody knows.
All right. But it potentially might not be the worst recession ever, since the economy has been so high. And because haven't we already seen 2 negative quarters of GDP decline?
Slowing down, yes, but I don't know whether we are already technically in a recession.
I think because a lot of people said, well, the technical definition is 2 negative quarters, but then the government said, no, we're looking at much more than just the slowdown. We're looking at like unemployment and a bunch of other factors, and they didn't declare that it wasn't a recession.
So if you look at unemployment, most countries still have full employment. Everything is great, full natural employment. So we are not looking at a recession, but technically we could go into a recession. And then it all depends on how the central banks and everyone reacts. If they go again printing money, lowering interest rates, etc., then they might prevent something like that, or just have a soft landing. But the point is that they are really, really messing up our currencies, especially in Europe and the US. And as sooner or later, in Europe, the euro lost 20% against the dollar over the last year, and there is inflation of 10%. So I, as a European, I lost 30% of my purchasing power in 1 year. That's a terrible recession. That's a depression. That's a crash like you have not seen in the last 30 years.
That's crazy.
And people don't get it that, okay, my pension will be 30% less purchasing power over the long term, because you are now competing with 5 billion people in Asia in buying things they are buying, and prices simply go up, up, and up, but your salary doesn't follow that increase. So we already lost there. The recession has already happened. The depression has already happened, but it takes time for that to get into people's mind.
Yeah, that's so high. 30%, of your wealth. That's crazy.
It is still not reflected because most things are still priced in our currency, which is the euro. But slowly over time, if you buy something from China, you order it, you pay for it, you get it, etc., etc. Slowly, that prices in different currencies will be higher and higher because the European Central Bank is weakening our currency to make things look like everything is good in our currency.
Because the USA did that as well with all their quantitative easing, right? But did Europe just...
But the USA is the most dominant power in the world economically, militarily, and from a currency. The US dollar is still the reserve currency of the world. And when the US does that, everybody still wants the dollar. When there is trouble, everyone still flees to the dollar. So they have this advantage. They are slowly destroying it, as Ray Dalio says. But Europe hasn't that advantage. Europe is at the end of the chain, and therefore things are slowly deteriorating.
So do you think that will have some further effect in the market? Well, Michael Burry, he's always active on Twitter. He's saying that we've seen a little bit of a bounce up in the S&P 500, but he calls them dead cat bounces, as in the overall trend is down. What do you think of that?
I think that when the time comes that people understand that our currencies are managed in a way that those are worthless, that could be very, very detrimental to the economy and to everything. But for now, everyone still, when they see money, they see value. And as long as that continues to be like that, then everything is good. I was born in a communist country. Then I had war. So I have seen hyperinflation twice in my life, when I was 6, 7, and when I was 12, 13, 14. So if you are from stable countries, you never seen that. But let me just show you this. I was a billionaire when I was 6 years old. This is all worthless money. So we would go buy a loaf of bread like this. And the next day you needed another bunch of money. And this, I grew up with this. And the reason was that the people borrowed too much, the country borrowed too much, and then sooner or later the currency is gone. And that is the same what everyone else is doing now in Europe, in the US. Sooner or later, as Michael Burry says, the currency is gone. When will that happen? I hope it doesn't happen in the next 30 years, but it can also happen tomorrow. So
what country was that when you grew up?
I was born in Yugoslavia.
Oh, okay.
Then the war came, then it split in 6 countries, grew up then in Croatia, and now I moved in Slovenia. It's all the same former country, but because of the war, it's split.
Yeah. What currency was that? The one you got?
It was called dinars, so Yugoslavian. So here you have these. Then we had Croatians, these ones, and so forth and so forth. So
wow. So now that times are fine right now, what is like the best sort of way for people just to be positioned, especially if they're conservative, they're kind of, they see certain things happening and they're like, I want to be well positioned if these things happen. What is it?
These things are already developing. And I always say, if you think about your wealth, your financial future, if you can take a long-term mortgage with fixed interest rates and buy something of value, not an expensive, luxurious beachfront property that the rent yield on it is 1%. But if you can buy a property that will be in demand and that will give you a good yield, let's say your mortgage is 4% and you can get the rental yield with 10% vacancy and all the rules of 7%, that's always something to keep in mind, because that apartment will provide value for the next 100 years. While if you get a fixed mortgage, your rent, you will increase it with inflation, but your mortgage payment will be always the same for the next 30 years.
True.
But be sure to read the contract. So being levered is not such a bad idea.
Yeah. Especially if you can get that 30 years. That'd be so good.
30 years, yes.
Yeah.
Your banks know it is crazy to give 30-year fixed mortgages.
Yeah.
And that's why those banks don't do it. That's why you have a better financial system. But it is also risky from your perspective as a customer to get such mortgages, because in 5 years, don't know what can happen.
That's true.
Then the stock market now is 20, 30, 50% lower than where it was. Everything is on sale, thus it's much cheaper. And then you have to see, okay, if Google gives me 10%, am I ready to see it down another 30% after 2 years and buy more over time, dollar cost average? if you have such a strategy that you have your income, you have this, then simply just keep accumulating wealth where you see it. Real businesses, forget about the currencies and the denominations. Just think about, okay, is this company creating wealth for customers? Is it the best company? And even if there is a recession, customers usually go to the best companies, not to the second grade companies.
True. So owning the top of the line businesses.
Warren Buffett said, if you want to be protected from inflation, invest in the best business in the sector.
That's
because that business will survive inflation, will survive a recession, will in a recession take advantage of the situation, buy up other businesses, and then it will grow faster later.
Yeah.
But when investing, you just have to be flexible. If there is a recession, crash, Michael Burry, whatever he says, and stocks are 50% lower next year, what do you have to do?
Well, generally, if stocks are 50% cheaper, then you might want to be trying to accumulate.
You want to buy more. Even if you just reinvest the dividends over time, your long-term returns will be higher. Everyone is so afraid of a crash, of a stock market recession or whatever, but that is the biggest opportunity you can get in your life. When stocks are high, like they were a year ago, then your return will be automatically lower. That's simple mathematics. If stocks are lower, your returns will be higher. But people don't get it. Everyone wants their stocks to go up. No, you should want your stock to go down so you can buy more. Warren Buffett doesn't like that Apple went up.
That's
he
true.
would have spent another 100 million in it, billion, if it was still low.
Yeah. Well, what do you think of the strategy of just accumulating cash and waiting for the stocks to go down? Like even Warren Buffett, he's accumulated a lot of cash.
He has accumulated cash because he needs a lot of that for insurance.
Yeah.
So first it was 30 billion, then if you listen, it was 50, then 70 billion. So a lot of that cash is for insurance purposes. If there is a hurricane or this and that, he needs to be the fortress to sign all those insurance contracts, etc. And then if you don't see opportunities that fit your financial goals, investments, risk reward, then yes, you stay in cash and you keep searching. But if you just stay in cash, hoping that it will go lower because everybody is saying there will be a recession, there will be this. If everybody is seeing a recession and the Fed says, okay, we are going to stop hiking, we're going to lower interest rates by, I don't know, half a basis point or something like that, 50 basis points, then stocks will be 20% higher and your cash will be much, much less worth.
Yeah.
So it is a risk you are taking. So you have to see, okay, what are your financial goals? What are your opportunities? If you don't see opportunities, of course, you stay in cash. But always keep in mind that over the long term, cash will be worthless.
Yeah, that's true.
So it is a timing factor, but sooner or later you have to invest. And if stocks go down another 20%, which will mean that the economy and the situation looks uglier, which means that those waiting in cash will wait for even lower stock prices. You will not act. And then you get frozen, and then you just, over time, you see those stocks go up, and then you again wait for those to return to the previous levels, and then you don't do anything.
Yeah.
I had a person that I knew, they sold everything in March 2009.
Yeah.
Huge portfolio that he has been accumulating for 10 years because he was in panic. And then he said, it will go lower, I will buy more. And then in 2015, start of 2000, he entered the market back and just caught that 20% drop just to exit again. Yeah. So he missed all the upside and then lost even more. So that was a story that happens to those that try to time the market. So don't time the market.
Yeah.
See what is the price, what is the likely return, and how it fits you for the risk. We cannot predict the future, but we can know that Google has a P ratio of 20 now, and that in 10 years it will be a bit bigger and better business. And that's it.
Yeah, it's kind of for those reasons why I saw this fact a couple of months ago, or whatever, and it showed the long-term returns of the regular investor. Can't remember what it was, but it was so much worse than the market. It was like a third of the market or something crazy like that. Because
I can send you. It's a snip from JP Morgan's Guide to Markets.
yeah.
And over the last 20 years, the average investor has done 3.6% per year, and the S&P 500 9.6%.
Yeah.
So it's a staggering difference, but that is because investors do the opposite of what should be done. And if you do the opposite of what most investors do, you are not the market because the market is average. You are double the market for your personal wealth, because you buy more at terrible times, which means that in your life wealth cycle accumulating, you do much better than the average investor or the average market even.
Yeah, just sticking to like some simple fundamental principles just can be so great when it comes to getting high long-term returns. That's the hard thing.
That is also the hard part, especially if you watch us on YouTube.
Yeah, I know.
Buy this, buy that.
See all these headlines. See everyone on Twitter.
Because investing also with the headlines and everything has become such a business, and that unfortunately is skewed from the reality. Warren Buffett does one conference a year and one letter a year, and that's it. If I would put one video a year on YouTube, we would never talk because you would never know about me.
Yeah. But even Warren Buffett, every day he's watching CNBC, like he's reading everything, you know? So
he's mostly reading annual reports and then watching CNBC, okay, what's going on? But his mind needs to be entertained so that he doesn't do much.
Yeah.
So he's keeping himself entertained, playing bridge, looking at this, doing that. But then he doesn't have to do much. The businesses just do it by itself.
Yeah. But I still think it isn't an important trait to be just watching and reading and seeing what's going on. Doesn't mean you have to act all the time, but yeah, pay attention to this and just try your best to be objective. If you just sit on your hands and actually like not read or not do anything or not pay attention, I don't know how well those types of people would perform if they're.
I heard recently something. They say that wisdom is the capacity to separate the information from the person that gave you the information. So if you can separate the information from the messenger, then you can just take advantage of the information and forget about the messenger.
Yeah.
And then you can see, okay, how does that information fit you? If it fits you at all, if it doesn't fit, if it's not interested, you can disregard it. And then you collect just the information that matter to you.
Yeah.
Regardless of where you got it.
Yeah. Just looking at the facts, what is true, and then how does this work with my strategy? Yeah.
Of course, I read everything. When I'm interested in a stock, I go online to all these blogs and everything, and I read 20 articles. I don't care who wrote it, but after you read 20 articles about the company, you get the crucial piece of information to get a clear picture about the company. And you know that if you read 20 articles from 20 different authors or analysts or this, that you're likely not missing the key factors. Also, and then you go to the conference call, you listen to what the analysts ask, and then you know, okay, this is what the market thinks. This is my analysis. Who is wrong? Who is right? And then you see how it fits you.
Yeah.
So yes, collecting information is the key, but then you have to see how it fits you.
Yeah, that's so true. So I just want to finish this off with some quick fire questions. So basically, if you can just answer these as quick as possible, just to get
All right.
to get a gauge for how you feel about certain topics. Okay. So what do you think of the strategy of copying Warren Buffett's investments or other gurus' investments?
It on average it doesn't work, because I've just looked at all the investments from Bill Ackman, and yes, those are interesting businesses, but he's likely hedged for every position he owns. That is something that we retail investors, you cannot call up Goldman Sachs and say, I'll pay 50 million a month and I'm insured for whatever happens. So that's something you can't do. But then you have to see, okay, he's doing that, why he's doing that, can he have some edge that I don't see? And then you can see, okay, whether it fits you or not. But just following blindly, it's very, very difficult, because they have to report only the long positions. Everything else, the options, the short positions, the global positions, positions outside the US, they don't have to report it in the 13F. So you have no idea what they're doing.
What are your thoughts on investing in crypto?
I think that, I hope that the blockchain technology will bring a lot of benefits with how things are structured, ledgered, how money moves and everything. But as long as crypto is there just to make those that have the cryptocurrency exchanges rich, that now is even reverting because there is no purpose to that, and we see the crashes and everything, that's not the blockchain technology that will, like the internet was over the last 20 years, be a great benefit to humanity. And then, of course, if someone gets a no traction, a product that gives no traction, that is really a benefit, like the Amazons, the Google in the crypto world, not just getting rich quickly, that will work. But when that comes, we will see. Maybe it will be Bitcoin, but if you have to spend so much energy, there is no point in doing it. So we will see. It has to be frictionless. And if there is friction, there will be some other competition coming in making it frictionless. We are talking now on video, it doesn't cost anything. 20 years ago, it would cost us a car to speak across the globe like this. Yeah. So somebody else will come and will make blockchain frictionless, and that will be the winner that will then obliterate the others. And that's great technology, but the gambling around the crypto is a negative. As long as it is gambling, I'm staying away. When there is value, we'll take a look.
What are your thoughts on investing in gold and silver? Because a lot of people look at gold and silver and they say, well, there's all of this going on in the market, all of these risks, all of this. And their answer is gold and silver. They see that as their form of safety and security. What do you think?
Gold and silver are sentiment-based investments. As long as there are gold bugs buying gold, gold will do good. But that is the generation still of the 70s, 80s, etc. And I don't see the millennials running around buying silver coins, gold coins. So if they start selling, then the price will go down no matter what. So there is, when I say gold, it doesn't produce anything. You can buy gold miners, but the best strategy, I think, there is just an all-weather Ray Dalio strategy. You put, I don't know, that much of your portfolio wealth into that. If it goes lower, you bring it to that percentage. If it goes higher, you sell and you bring it back to the fixed percentage. And if you then you have your stash of gold or something like that, and it's pretty stable, and you just take advantage of the fluctuations. But long term, I prefer businesses to gold. So it sounds, well, yes, it is stability, it is this, but it doesn't have to be, which is the risk.
Mm. when you say the Ray Dalio approach, so do you mean like 5% of the portfolio? Something like that.
If somebody asks me, then okay, do that. You put 5%. Gold miners are, for example, much more volatile than gold. So you can put 5% in gold miners. When that becomes 10% of your portfolio, bring it down to 5%. If it becomes 2.5% of your portfolio, bring it up to 5%. Then when it becomes 10, you bring it down again. And then you will have a yield on that trading and also some exposure to gold. But what usually happens is people start buying more. And there are a lot of people that got stuck in gold miners over the last 10, 20 years. And it has been a terrible, terrible place to invest for most of those. So not for me. I prefer businesses like Google that grow than just owning gold.
Yeah, I agree with you on that one. Just looking at the long-term returns of gold over the past however many years, it doesn't seem to be very, very attractive. But I do speak to people and they're like, they see everything going on and all these risks, and they're like, gold, go for gold, go for gold. But
I over the last 7 years, I really looked a lot at miners, and if I would just analyze gold miners, I would be very rich. But that would be on selling to those people who want to invest in that, because there is a lack of research. But what can I say? I would not invest there.
Yeah, that's also a different ball game as well. Miners who are producing and selling compared to just owning the gold itself.
Yeah, and then if you look at the most famous, I did that in 2016-17, the most famous YouTubers discussing gold and silver. There are a few. If you look at how they make money by having gold exchanges, gold products, and they make money on fees when you buy and sell those gold-related investments. And that's why they say, yes, gold at whatever price, always buy gold, but they get money on their fees, and that's how they make money.
Yeah, it's so important to look at what are people's incentives of doing something.
Always look at the incentive. Yes.
Yeah. Charlie Munger or Warren Buffett?
Charlie Munger.
Index funds or active investing?
For me, active investing.
Who's going to win the Football World Cup?
That's a good one.
That is a good one.
No idea. I'm not really following.
No.
I think Croatia will do well. They will pass the first stage, and then we'll see where they can go very long if they have a little bit of luck. So there is a lot of luck from an investing risk and reward perspective in these games. Once you get to the quarterfinals, there is a lot of luck. One ball here, one ball there, and South Korea can get to the semifinals like it was 20 years ago or something like that. So yes, true. We'll see.
Yeah, Croatia, they got a decent team. They got Modric and a couple of other good players. I've heard people say that people that I think they got good opinions on things. They recommend Eastern Europe as a place to live. What do you think? They say it's like one of the best places to live in the world.
Are they living there?
Well, they were living there, then they moved. I don't know, but
I don't know why.
Yeah, they just say in terms of values, they think the people there are really nice as well, and the weather.
I lived in the Netherlands, I lived in the UK, and I lived in Croatia, and now in Slovenia. For me, it is great to live here in Eastern Europe because this is my home. I know the language and I know how things work. But I have friends here that came from England. They don't speak the language, and it is a mess.
And they don't have good connections probably as well.
You will forever be a stranger in a world that doesn't really work how you think the world works. And then you will be lost in translation. Really, I look at them and they are lost in translation. They looked at the beautiful nature, the good food, the lower prices, the debt, and everything really beautiful. And we enjoy it. I really enjoy it. I'm at home. It's, life in Slovenia now is 5 times better than in the Netherlands for me. But I am home here. If a Dutch person comes to live here, it would be here, because they don't understand how things work, etc. So it's
That's
again
true, yeah.
personal. Yeah.
Yeah.
There was one great story that I read. Some people come to a gas station and ask how is life here in this city? And they ask how it was there where you come from. Oh, terrible. And the gas person says, here it's terrible too.
Yeah.
Another car comes, how is life in this city? Oh, how was it there? It was great, beautiful, great people. It is the same here. So it is about the person at the end.
That's true. That's true. Yeah, I have considered it and all of that, but yeah, probably if I actually think about the practical elements of living in a country like that, I probably wouldn't like it as much, just because I wouldn't even know.
Maybe when you're young, when you are, let's say, in your 20s, you should go to live a year, 2 years, somewhere, explore the world. That's what I always suggest to anyone. You go. I went to London. We went there to the Netherlands. It was a great experience, but we got back home. And that experience of seeing other cultures and living there for years has really enriched us also living at home. So while you're still young and go.
True. Have you considered about USA just from a business perspective?
I have never been to the USA. So my friends that do great businesses, especially online, they moved to Georgia, not in the US,
Georgia.
but
Yeah.
Georgia in there, close to Russia, because the taxes are 1% on your revenue.
Oh, 1%.
So they're practically paying no taxes, and that's why they moved there. Global businesses, 1% taxes. So they will live there for 5 years, make their money, and then they can live wherever they want.
Oh, crazy. 1%.
So if you have an online business like you do, and you don't want to pay taxes, move to Georgia.
Yeah. But also that's in terms of taxes, but in terms of business opportunity, I feel like the USA is the best. Like learning, you'd get to know the actual stocks more, in terms of like other creators and stuff. They're all there. But yeah.
Well, yeah. Today we are all everywhere online, so
yeah.
Sure.
Yeah, that's true. Anyway, so I've taken up quite a bit of your time already, so I don't want to do it too long.
It was my pleasure.
Yeah, thank you very much. I think that was a great interview, and there was some very interesting topics that we covered, and yeah, and you didn't you answered all the questions.
I'm happy to do that.
Yeah. Well, hopefully have you on again. Even I think a nice video would be for 2023, and just go over some basics of investing in the stock market and different strategies. That could be interesting.
Perfect. Write it down, let me know, and I'll be there.
I'll flick you an email at some point. Okay. Thank you very much for your time, though.
Thank you.
So there you have it, guys. That was Sven Carlin, one of the biggest, I actually believe he is the biggest value investor on YouTube. As you can see from that conversation, he's just honest up front. He'll tell you exactly what he thinks, what his mind is, and he's got a great long-term return over the past 20 years. I think we covered everything. We covered a great amount of topics: crypto, investing in China, where does he see opportunity in the market, what countries he's looking at sort of investing in, what does he think about the big stocks like Meta, Apple, Amazon, Google, where he sees opportunity there. We'll cover different sectors. What do you think? I thought that was a really good conversation with a high class investor. So guys, I hope you enjoyed the video. As I say, this channel is about two things. One is business, which is making money, bringing it in. And two, that is investing, which is which is you got money and growing that money. And hopefully that will be in a passive form, whereas where you can just own something like a stock, which just produces money, where you just own it passively, or real estate, where again, that's a passive form of investing. You own the house, you rent it out, and you get money that way. You're not really working every day, putting on that suit and tie, working actively for money. It's a passive way of generating money. That's what the channel's about. Let's see. I hope you enjoyed the video, guys. Sven Carlin is the best. See ya.